Hello and welcome to today's edition of the Daily Standard Editors Podcast. My name is Peter Wakaba, and today here we are going to be doing some heavy lifting, discussing matters budgeting and the Finance Bill 2024. I am joined here in studio by a panel of experts. First off, of course, a face you all know, Ochieng Rapuro, Editor-in-Chief here at the Standard, and a man with many years of experience in journalism in business. Karibu sana.
Asante.
Also joining us today, Mohammed Mohammed. He has over 20 years experience in the world of business and finance. And of course, he is a finance expert. Karibu sana as well.
Asante sana.
Now, gentlemen, we have convened here today to discuss a very simple topic, to some very complicated, but indeed break it down so that people understand the fact that budgets are no longer made the way they used to be, that there used to be this big secret that would be revealed on budget day. We're now different. We have had the financial statements, the proposals, the things that people are critiquing today for some time now. Mohammed, let's start with you. What do you think are the key sticking points in this budget?
Well, I look at it more as almost like a Robin Hood budget.
Yes.
Okay, where there's a lot of heavy taxing on the people with the money, the wealthy, where they're being taxed, and also on luxury items.
Yes.
Which again, I foresee that being punitive because it's developing. It's going to curtail expenditure of most people and disposable income of the middle class and even part of the bottom of the pyramid. So the stakes are high, and if this budget, if it's supposed to spark growth,
yes,
I don't see that happening so much. Of course, in the short term, it may happen. But in the long term, the cost of implementing this thing will be seen through reduction on taxes to be collected. That's my personal opinion.
Well, indeed, quite an incisive opening statement there. Ochieng, I want to come to you, and the fact of the matter has been that at 4.2, 4.3 trillion shillings, many people are terming this budget very ambitious. Do you agree? Do you think we will be able to achieve the goals we've set out ourselves?
I don't think so. Basically, I agree with what Mohammed is saying. It's some of the tax measures that we have in this budget are actually measures that will have the reverse effect of reducing the amount of revenue that we will realize in terms of taxes. The figure is this: in the current financial year,
yes,
we had a revenue target of 2.5 trillion. And with the tax measures that we put in place,
yes,
we expected that this is something that would be easily achievable because we increased taxation on some things, mobile telephone stuff,
yes,
petroleum, these are high velocity consumption items that would generate
a lot of
or
revenue.
So we thought a lot of revenue. But as we sit here today with the data that came out for the third quarter of the current financial year, we were at a slow point of 1.5 trillion.
So literally a shortfall of a trillion
to reach the target.
Wow.
In 3 months.
Yes.
So you can see already 2.5 is already too ambitious. And that tells you now, talking about, you said 4.2, 4.3 is over ambitious.
Yes. There are those who then say that the challenge has been the shock to the system, that the measures put in place last year during the last budget were so draconian that they then shut down consumption. A lot of people have cut back. The cost of living has been up, so people are reducing spending. They then say that with the additional tax measures proposed in this budget, it's essentially throwing out the baby with the bathwater, and that we're essentially killing the economy. Do you think we ought to scale back or continue to drill down for more tax?
Basically, what I think from where I sit is tax is basically an instrument of policy execution.
Yes.
And so we use taxes or taxation to either encourage growth or thriving in certain sectors and discourage some things. That's how the balance of taxes work.
Yes.
If you then go a little higher, and this is what actually should be the end result of taxation, that
Yes.
it should be something that gives, particularly business, some sort of certainty and stability.
Yes.
And so if you look at the government's own policy documents,
Yes.
they told us last year that we were going into a space of stability,
Yes.
and therefore any tax measure introduced would be left to last at least 5 years
Yes.
before it is tinkered with, before it is changed. Now, when you look at what we have here today as proposals for the current year's budget, we are already tinkering with a lot of things we introduced only last year in the current year's budget.
Yes.
And so this takes us to a place where there's a certainty, the stability that business would be looking for is not there.
When you look at Mohammed, the amount of fiscal space that government has to raise money to provide for the loans that we have coming up, we know that in June we're supposed to start repayments for SGR. We know that in December we had the crisis around the Eurobond. We have some of those payments, despite having kicked the can down the road, still coming up. There's very little wiggle space. So essentially, should we be blaming them, essentially government, for trying to raise money to fill these holes? Or are we saying that there are more creative, there are more innovative ways to do this?
I think there are more innovative ways of doing this.
Yes.
And I've even mentioned before in some of my conversations with various people, we also need now to start thinking about developing an economic blueprint moving forward, which provides...
But we have Vision 2030.
Which, I mean, if you adhere to that,
yes.
or maybe we just need to...
And then we broke it down into 5-year periods
to
and
review
said
why
that
maybe it's not working or not being implemented.
Yes.
Because I'm not questioning the... I mean, what the leadership is trying to put into place.
Yes.
But my concern is, if there's change of economic policies.
Every 5 years, yes. We have new leadership.
Comes, how do you plan? Okay? How do you maintain economic stability within the country? And how do you even give confidence to investors coming on board? And this is a challenge even if when you're allocating a substantive amount of your cash towards loan repayments and the current expenditure, then how do you grow the economy with inadequate development expenditure? Or how do you promote or motivate or create incentives for the mwananchi, local person, to participate in the tax process? Because I don't believe you need to force people to get into the tax bracket.
Yes.
You need to create an environment where people automatically get into that. That is through employment, through promotion of positive business policies or business growth.
Yes.
Because automatically they'll come into those brackets.
Yes.
And when you try to force things down or to increase the brackets or put more people, remember a number of the people in Kenya are really living on hand-to-mouth basis. Maybe so-called Kadogo economy. But then that same Kadogo economy is what has also contributed towards even some growth in some companies within the various industry sectors, telecommunication, banking,
big
and all that.
Corporations.
Big corporations. So then, if you cut out or if you impact on the disposable income of this part of the economy,
yes,
already there's tax being collected through these
through consumption. Yes.
Through consumption. So why do you create that impact? Because there's going to be that impact where these guys will be spending less, so it's going to impact also
their consumption
negatively
and
consumption on
by
some of these
extension,
multinationals, which are already giving you substantive taxes. Some of them being the largest taxpayers in East and Central Africa. So I feel that there's not been a very clear balance in terms of balancing these taxes. And some key areas, okay, I know there's been a lot of issues on motor vehicle tax, which again is not equitable.
Before you move, I want to break down what you've said, because you've talked about two different things. First off, the fact that we need to create a system which enables predictability of taxes going forward, which is the economic blueprint.
Yes.
And you've said that for some reason we're not following through on Vision 2030, not amending it, but essentially that the reality on the ground tends to deviate from it every 5 years in different directions, creating the challenges that we are seeing now.
Yeah.
Then secondly, we've talked about implementation of taxes that will not create additional challenges, because we already know that consumption taxes are being collected when people buy goods and services in the Kadogo economy, and this trickle through to government, right?
Yes.
Yeah.
When you look at the challenges, Rapuro, that we have in terms of when a government comes in and says the coffers are empty, because that was the reality that they placed in front of us, but they are then faced with these humongous loans that we have to finance. What then would be the creative ways that we have? Because they can either deepen tax, they can expand the tax net, they can rearrange the payment terms so that we then have longer periods and that sort of thing. But the realities then are that we are between a rock and a hard place.
Well, you can only propose those innovative ways when you really understand why the coffers are empty in the first place.
Yes.
Yeah. Because, there's not a plug-and-play solution for every problem. You've really got to understand and see where how it got there. Because we need to understand, we need to understand when we say the coffers are empty.
Yes.
Why was there expenditure over and above the budget that happened before? And how do we streamline that kind of situation?
Yes.
Maybe from other economies could have different point of views. For instance, the government is not paying our people currently.
Yes.
They're not paying their bills, and you need money to circulate in the economy to create that growth. And I know it's a difficult balancing act for them, because maybe the money doesn't circulate at the speed at which you want it to come, so it might delay or have an impact on this other side. But there are different ways. I'm sure having discussions about restructuring, or how the government can be able to boost flow of cash within the economy to ensure that there's more circulation. Now, those are again technical details which I'm sure unless now you get into
a different conversation,
you can be able to answer. But I do believe we have experts in the government. We have people who can be able to come up with solutions that are oriented towards the development of the country and the Mwananchi. Otherwise, it will be very difficult to live in this country with the current taxes.
I think you make a very important point, Mohammed. The point of understanding really what the situation is, and therefore what the problem is. Otherwise, you get to a position where you are carried away by the big numbers, which you can't explain. For example, our president has lately gotten into this evangelism of tax revenues to GDP ratio.
Yes.
Yeah, and in his view, he takes the view that at 16%, we are very low compared to global standards. We are underperforming. But we are forgetting how we got into this 16%. I remember very well during President Kibaki's time, Kenya had a very good organic growth in tax revenues.
Yes.
And when you came to tax to GDP ratio, there was a time when we were at 22%.
22, yes.
Yeah. Then we did something that is the reason we are here. We did something called rebasing the economy.
We have actually done it twice.
And we have done it twice. So the first time we did it,
in 2009,
it brought that ratio down to 18%.
Yes.
What did we do with rebasing? We brought in a lot of data from the informal economy.
Yes.
Yeah,
and
this informal economy is an economy that we better tax it through what Mohammed is saying, through consumption.
Yes.
Now we have brought it into the data. Our GDP has expanded, but how to tax it is the problem.
So essentially what you're saying is that when we rebased our economy in 2009 and I think in 2016, if I'm not wrong, the economy expands in numbers. Because we are now calculating the informal GDP as part of the main GDP. But we then don't have any measures to target them directly.
To tax directly.
Which is what we are trying to do now.
Exactly.
And creating the challenges that we have.
Yes, and therefore going to what Mohammed is talking about, trying to forcefully bring people to the tax bracket instead of allowing that process to continue naturally, where you encourage growth. When somebody is able to grow their business, they will definitely come to the surface. And start paying the taxes.
So the question then, Mohammed, I will ask, because you had mentioned it in passing, I think, is what then are the measures that we are talking about that could be in this budget to spur the growth and formalization that you alluded to, so that then these people can start to come into the formal economy?
I've jotted down a few points, but they may not be as significant as some of the ones.
But please,
for example, there are positive things to do with the non-taxable benefits, where you're increasing, which are being increased from 36 to 48k. Pension contribution, meal allowances. There's also contribution from housing levy and the SHIF to be allowable deductions in financial statements. The other positive thing I think on this one is the VAT registration threshold. Having been increased for SMEs from 5 million to 8 million. I think that's a good thing, because it may guide some SMEs now in terms of preservation of cash, because the minute you go beyond 5M, you are obliged now to register for VAT, which might also not really be an advantage per se, because when you are now supplying a vatable company, they expect you to provide a vatable invoice. And some of the disadvantages that even in your services, if you're not able to claim the input VAT, then the VAT becomes part of your cost of production. So yes, it has its positives and negatives, but I look at it more on the positive side.
One of the things they've also said is that for government, people supplying to government, you can claim, was it taxation?
It qualifies for purposes of taxable income upon payment. And this is actually really addressing something that has really been a pain point, a thorn in the flesh for many people who do business with government. That you do business with government in the year 2022, and that is recognized immediately as revenue for purposes of taxation. The government may not pay you 1, 2, 3 years down the line. So what that meant is, basically, you do business with government, and then you have to find money.
You have to take a loan.
Probably take a loan from a bank to pay your taxes.
And
to pay
tax.
Pay you, and then wait for 5 years.
And if the bank doesn't recover as much as what you took,
they
have to write it off.
So
it pays less.
Exactly.
In terms of the tax due to the government, because now they provide for it as a bad debt.
So you can see, this is a very good provision they have put there, that basically will not only ease the pain for suppliers or the people doing business with government, but also shields financiers and other players in the system from that loss that ultimately actually contributes to less taxes for government.
And the challenges that businesses are faced. But gentlemen, we've started with the positive things. I'm sure there are lots of many different pain points in this budget. I think we can start with you, Mohammed. What do you think are the things that are really sticking out in terms of the challenges that this budget is creating?
Okay, there's one positive thing which
we have left out.
I was just coming to that. Because so that you don't look at it as all is gloom. I think we have to be objective. Though the pain points are really painful. But for example, the advanced pricing agreements. Okay, it kind of creates some more clarity.
Break that down.
Please explain.
Okay. They're talking about advanced pricing agreements vis-a-vis looking at it against transfer pricing. This is for related party transactions.
Yes.
So now you enter into advance. You go into advance agreements for related party transactions, which was, I think at times was a challenge because you needed approvals from KRA
Yes.
on the previous transfer pricing policy.
Yeah, so maybe just to break that down for our viewers, when people do business across borders, you can be taxed here in Kenya or taxed in the other jurisdiction. And sometimes the challenges that transfer pricing created was people would enter into contracts which would simply shift their profits to a different jurisdiction where tax liability is less, meaning that then they'd pay less tax.
Well, there's a difference between tax evasion and tax avoidance.
Yes.
So everyone works towards minimizing their tax liability because you can't run away from tax.
Yes.
And that's what I tell people. Don't be cheated that by someone that fanya hivi.
You can avoid it. Yes.
No, evade. So, one, of course, in part of the transfer pricing policy, it has to be at arm's length.
Yes.
Because you should not be looking like you're transferring profits to other places. Okay. And two, is that you notice that in the structure, usually for setup, you mostly you try to work with countries where you have double tax treaty agreements to avoid a risk of double
taxation. Yes.
Yeah.
So that if there's an issue of withholding tax being held in Kenya, they can offset it against
what is in other places,
other side, in other countries, so that the income that is earned on that side is not subjected to tax twice. Like if you withhold here and then on that side you still pay taxes, then it actually discourages.
Yes, and then we also ideally want the tax to stay in the country where the business was done, so as to raise tax revenues. For example, in Kenya.
Yeah, well, because yes, you need that money to remain over here, and then also if I'm making you earn money in my country,
yes,
okay, why should I not tax you? Why should you now repatriate that money in your country of residence and pay taxes there?
Yes.
Okay. It doesn't make sense. It's like, if I'm giving you my daughter for marriage, I'm saying you come stay in my house, and then I give you money, and then use that money now to go for CEO's daughter,
it creates a big challenge. Yeah. So this is part of the challenge that has been created by companies which come in over-the-top businesses. For example, the companies that provide services online. We've seen YouTube, we've seen Google, we've seen others have these sorts of challenges where government claims you're doing business here, but your taxes are payable in a different jurisdiction, set up offices in Nairobi, pay the money here, those sorts of concerns.
Well, there's an introduction of a PIN for every for
over-the-top businesses.
For people who are working on remotely.
Yes.
So, because of course there'll be administrative issues when it comes to defining that point of supply.
Yes.
At what point to charge the VAT or whatever. So I guess the introduction of this, which may be subject to further clarification, of if you're dealing with business and you have to pay someone outside the country, I mean, if one of the recommendations, if you're paying through a debit card or credit card or through bank transfer, if it's through bank transfer, then you will have to deal with a person who already has a PIN. So from an administrative perspective,
it makes life easier.
It makes life easier. And yes, okay, so the challenge of that, what will it be? Because you want to be the Silicon Hub of Africa or of East Africa. And Kenya has a lot of potential in that direction. And these digital services is the future of now towards creation of employment and all that. And just like what my brother Rapuro was saying, is that when you're introducing these taxes, what do you intend
what's your objective?
What's your objective? Like because you have to be careful that you don't kill the industry. For instance, if it matters to do with agriculture and you introduce VAT, then you kill farming. Yeah, that's
which is one of the real sticking points that we have to look into.
Yes. Yeah. So you've got to say that whatever you are trying to promote, you've got to allow it to grow. You don't nip it in the bud before it gets to sprout. And that's what is happening, and that's the danger of some of these taxes. So yes, you are collecting, but you'll collect at a regressive level, not progressive. So in the short term you may see some short-term benefits, but now after 1 or 2 years, it's going to impact on you.
Mm.
Yeah. So what will you do again?
Yes, so we have to be conscious of time because I know it's winding down quite fast, and I want us to cover some of the proposals.
Yeah.
One sticking
so
point.
the other one,
yes,
debtors. You see now, the commissioner right now is not obliged to follow you in terms of taxes if you're already in if you gone bankrupt or something.
Yeah.
So before, or rather, if your business is not doing well.
Yes.
So you see, because before they will really come for you, and then also you've got agency notices now not going beyond 12 months. But again, it's not clear whether they can renew.
Yes.
Or now once they do it for 1 year, it remains that way. So that's just a key things to talk about.
Focus on, yes.
Now on the thorny issues, of course we've got motor vehicle tax,
yes,
2.5, which again I don't need to talk about it. It's everywhere. Everyone is talking about it, and again it's punitive and unequitable because the people driving the big cars, I'm not going to feel the pinch of 100k.
Also not applicable to government and related parties. Yeah.
So again, you just keep taxing the already overtaxed.
But a real pain, thorn in the flesh of businesses that operate large fleets of vehicles.
Yes.
This is the point here, and therefore, taking from where we started, a tax measure that is really unlikely to yield much in terms of growth of revenue, but can easily have a negative impact on business.
It will, because again, it's not clear on the Finance Act whether it will be an allowable deduction. Again, I've not gone deep into that, but maybe a clarification will have to be found, or will it be like final tax? So again, if it's not an allowable deduction, if it's added back, then again, you're paying another 30% on top of it.
Yeah.
So if you're paying a tax of 100k, assuming you've got a fleet of 100 vehicles, that's about how much? 10 million.
10 million.
So if it's a disallowable expense, then again another 3 million, 30% goes out.
Imagine
so
you are in this transport business. You have these guys with trailers, and you have a fleet of 100.
Yeah.
Yeah. Each of those trailers obviously will pay the maximum.
But maybe
you have 20
maybe it is meant to promote the SGR cargo. You never know. Maybe it is. So you might be because especially if at all they want to pay for SGR, they need to make sure that SGR collects as much money as possible. But then at what expense? That's the thing. How do you balance? At what expense of that? And then the other one is, of course, there's introduction of minimum top-up tax, which again, this seems to be hitting multinational enterprises.
Yes.
Again, I'm not very clear on that, because the question will be, these multinationals, are they subject to, again, the installment tax and, the corporate tax? All those things will need to be clarified. Of course, removal of exemption from income earned by a registered family. I see this as inheritance tax masked into something else. The issue of bread now exempt from zero rated. Okay, it's not a good thing, but there are alternatives to bread, which may actually promote agriculture in terms of production of alternatives to bread. But the industry will be affected in terms of employment.
And it's something a lot of people, poor people, eat because it doesn't take much to prepare, and it's convenient. And if you're looking for a quick lunch, ugali will take paraffin or something else to prepare, firewood. It will take time. Soda na mkate or tea and bread or even water is a get up and go meal. It's quick. So it's literally hitting a lot of poor people, a lot of schools. We saw the recent picture of policemen at the celebrations in Bungoma. Their lunch was soda na mkate. And this essentially is hitting a lot of people.
Yeah, so definitely. And of course, okay, that is one aspect in terms of eating, but from an economic point of view, there will be reduced production because there will be reduced uptake of the product.
Yes.
So that is definitely going to impact on employment. So you see, whatever you do, you have to also preserve employment as much as possible. And this is how you create more people into the tax bracket.
Yes, bring them into the tax bracket.
Yeah, otherwise, that's where I see it from an economic point of view.
Then there is this. There's some measures here that have been introduced, Mohammed, and when on the face of it, it looks like they are very well-intentioned measures.
Yes.
But then the import of it would basically be disastrous in terms of the outcomes. For example, this enhanced taxation of edible oils.
Actually, removal of the rebates.
The rebates, sorry.
So, well, I had the president talking about that they're going to start seeing how they'll create land, I don't know, for palm oil production and cashew nut oil production. But the question, and I think we've talked about this some time before, is shouldn't you have waited for that industry to have
the sequencing,
to have grown before you introduce some of these taxes? And my biggest fear on especially edible oils is that I don't know, I can't think of any alternative to that product for a human.
Palm oil,
Okay? Because you see, like bread, you can say you can take nduma, ngwashe, or cassava, ugali.
Yes.
But this particular product, okay, where you are removing the rebates, how do you expect the mwananchi now to consume? Because what alternative are you providing to the consumer? Yeah, and already most of these products are out of reach for many.
Very highly priced.
Okay? And even if you look at these manufacturing industries, the way they're operating suboptimally, because even then again, the uptake of these products is still a problem.
It's still low.
Because sometimes you think you are saving, but you're going to create a health crisis, because the alternatives that people are going to use are not going to be healthy alternatives. So your budget is going to be diverted now towards other bigger challenges of big terminal diseases and other things that you might not have thought of. So I'm worried about that. Motor vehicle, yes, we can argue a lot about it, but in terms of human health,
it creates a real challenge.
I don't think we really need to compromise.
Or maybe there is oil in the region in terms of maybe COMESA or East Africa or one of those that they might be encouraging importation of rather than Malaysia, Indonesia, and the Far East.
There isn't.
There isn't. I mean, even again that edible oil production. From the East African community. First before you export, you've got to make sure that your local. You've been able to satisfy local demand. For example, like India, they never export rice because if you export, what will the people eat?
Crisis.
So you create incentives for the basic commodity. But
so in winding up, there are some very interesting provisions here, Mohammed, that you can just talk about briefly as we conclude. There is a proposal to tax amateur sporting associations. And then the second one is introduction of withholding tax on interest income arising from bonds used.
So this is bonds that government bonds.
Yeah, government bonds.
They pay you interest and then you pay them
to raise
back
funds
money.
for infrastructure, for example.
Okay, without sounding controversial, I don't see a problem with that.
Yes.
I know some people might be saying that.
That's why I say they are
interested. There is a lot of money there.
I think people will be talking about discouraging FDIs. But your government is paying 18 to 20%
it's actually
on
20,
these bonds.
Yes.
And if you compare from an investor in the US who hardly gets 1 or 2% on the investment, okay, what is my problem?
It's a lot of money.
That person in the US, if he's investing 10 million, he's going to get 2 million on it, isn't it?
Yes.
That 2 million, he has to account for it in the US and pay tax on it. And I'm giving you as Kenya an opportunity to make money here, and I'm not supposed to withhold anything. Why? So some people will look at it differently. The question which you should be asking, I think, without again, I know there's been some controversy now about it, is Kenya needs to work more on double tax treaty agreements because they need to look at where most of the FDIs are coming from, foreign direct investors. If a number of them are coming in the US, then they need to work on those agreements between Kenya and US so that now people are not impacted on double taxation. Because if I'm trying to raise, how much is the bond? Is it 400 billion? How much? 200? So if I'm to pay 20% interest on 200 billion bond, if I'm not mistaken, so that's like what, 8 billion?
8B.
Yeah. Why can't I hold my 15%? Which can assist maybe to give back rebates on
Yeah.
these
Yes.
other things. So again, it's how you look at it. And most of these tax measures, they're not meant to please many people. It's really about the objective of what you want to try to achieve,
Exactly.
and how you create a balancing act, because sometimes you take from one side and give to the other side.
Yes,
The other one is eco levy,
Yes.
which again is motor vehicles,
Yeah.
which are going to be hit for car batteries. So yes, so I guess maybe just
Unfortunately, I think we've run out of time. 30 minutes really does fly when you're having fun, but thank you very much, gentlemen.
Thank you so much.
Ochieng Rapuro and Mohammed. Thank you for taking the time.
Thank
I
you.
propose we do this again next week
Sure.
and see where it goes from there. I think quite an interesting conversation, but thank you for your time.
Thank you too. Okay.